Welcome to our November Tech Trends update, as we got plenty of news after many of the largest companies in the world reported earnings. We are almost done with third quarter earnings, and the standout earnings this quarter came from Amazon, as investors had been concerned that the company was losing share in their cloud business. But the company reported that their AWS cloud revenues accelerated to 20% growth from 17% the previous quarter and grew at the fastest rate since 2022. Amazon also announced a $38 billion deal to provide computers for OpenAI. Alphabet and Apple also had strong results, but the share price reactions were more muted as expectations were high going into earnings. The two disappointing results came from Microsoft and Meta. Microsoft's cloud business for the quarter had weaker results compared to buy-side expectations that we previewed in our tech earnings expectations report. They also gave slightly weaker guidance. We think this is a buying opportunity in Microsoft shares, and we have been using weakness in shares to add to the shares in the AMS equity portfolio, as it continues to be our largest holding. Meta also had disappointing results as their fourth quarter guidance was weaker than expected, but the bigger issue for the shares is the continued increase in spending intentions for 2026. The entire industry continues to increase their spending intentions, which has helped the whole supply chain for artificial intelligence, which includes everything from semiconductors to power. This was highlighted at Nvidia's annual GTC conference, where the company discussed that they expect $500 billion in revenues from their new Blackwell and Rubin chips over the next few quarters, which got the market excited. Nvidia also announced partnerships with companies like CrowdStrike and Nokia. On the flip side, SoftBank disclosed they sold their last bit of Nvidia shares for $5.8 billion, which they intend to use for other AI investments. We continue to get concerns about an AI bubble, as many investors were buzzing about the recent BG2 podcast, where Sam Altman was confronted about how the company plans to spend over $1 trillion despite having only a few billion dollars of revenues. We have used cash in the AMS when these concerns about an AI bubble have occurred, and we used the slight market weakness throughout October and early November to add to our favorite technology stocks. The age of robots is here, as California-based startup 1X Technologies debuted their new Neo robot that can do chores around the house, as the company started to take pre-orders for what will be one of many robots to come out soon. We also got an update from Alphabet related to quantum computing, where the company announced they had developed a landmark quantum computing algorithm called Quantum Echoes. We also had a correction this month in the price of Bitcoin, which briefly dipped below the psychological level of $100,000. In the healthcare sector, things got heated in the weight loss drug arena, as we had a bidding war between Pfizer and Novo Nordisk for Metsera, which was ultimately won by Pfizer. Media reports discussed how the Trump Federal Trade Commission warned Novo Nordisk that the structure of their acquisition might violate U.S. antitrust law, which might have forced Novo Nordisk to bow out of the bidding war. Also in the healthcare sector, Revolution Medicines got one of the first new priority vouchers from the FDA for their pancreatic cancer treatment, which is intended to speed up drug approvals. Looking ahead, the market will be focused on Nvidia's results on November 19th. We also will have Amazon's annual AWS reInvent conference in early December. To start 2026, we will get the annual Consumer Electronics Show in Las Vegas, where everyone will be looking to see what new products will be unveiled in the new year. Once again, thank you for joining us.
This discussion is intended for informational purposes only. This is not investment research or investment advice, and no recommendation or financial advice is being given. This discussion does not take into account individual investment objectives, financial condition, or investor needs. The views and opinions expressed in this discussion may differ from the views and opinions of other departments or divisions of Itaú and its affiliates.